Right guys, I'm back, and what we're going to bring to you today is another scalping strategy. And what we're going to look at today is scalping the S&P futures, using a trending move, a directional move, to take little scalps out of it. And what this is all about is your understanding of why a market's moving in a certain way, and who's acting and where these participants are taking place. And this is a situation where typically what you're trying to do is you're trying to take on what I call a targetless trade. So a strategy you could use breaking record highs or moving into areas that we've not traded for years. You think WTI futures over the last couple of months, moving up to levels not seen since 2014. So what we're going to look at is how you can take part of the trade and take the scalp element. And these are trades that may last 1-2 minutes, maybe 2-3 minutes, but it's understanding what exactly you're looking for. And that's the key bit to these types of trades. And it's trying to make the most of that participation, that rush to get in as a market breaks, say, a previous record high. And S&P yesterday, 22nd of November, was a great example of this, where you could take a quick momentum driven move, and we'll look at how that momentum shows up on a price ladder. Little momentum move, little bit of pace up, and it's about understanding the bit of the move you're after. You're after the rush of participation, the almost the FOMO trade, if you will, as people panic and they become urgent to get into the trade. But what's so key about a trade like this is understanding that that's all you're trading for. You're making the most of these people panicking. That's what you're after. Once they've finished, once everybody's done their little, oh no, I must get into the trade. Once that's over, you can get out of the trade. And that's the art of a scalp trade. It's about recognizing what exactly you're playing for, not getting caught in the temptation of thinking, this could be a gigantic move to the upside. Maybe it can, maybe it can't. But if your edge is going to be gained in scalping, then what you've got to recognize is those little bits that you're after. And you're after that sudden pickup in participation, that little panicky movement that allows you to get in and out of the trade nice and quick, execute. You could take 3, 4, 5 handles out of a trade like this in the S&P. Pretty decent amount of money to be had. But it's about recognizing how it trades to get there, where that's likely to happen. So typically this is going to be trying to play a break of a high in a trending day. So there's numerous different types of scalp trades. One we looked at recently was much more about how to play a reversal type scalp. This is with trend, breaking highs, little momentum move, but making the most of that little moment and then getting away from that situation. So let's go and have a little look at this. And what we're going to be looking at is a move in the S&P through record highs. And the main part of the trade is the execution as you get to 23.25 and then as you break 23.25. That's where the action is. That's what we want to go and have a little look at. And I'm going to show you 2 scalp trades, 1 the initial break and 2 the follow-on trade that comes after that. And we'll look at the distinction between the two. One gives you a much cleaner move, one gives you a much more sort of jerky move. But it's about recognizing that shift in the way it trades that lets you get out of the trade. And that's the bit you need to be humble on. Don't get caught in the temptation of thinking there's a lot more in this than you might realistically be able to get out of it. Okay, so what we're going to be looking at, and this is also the value of a scalp trade, is the understanding of you're looking for this part of the move here. That's all you're taking out of it. You're just taking a nice little chunk out of the move, and that's it. By scalping, you can do this and you don't get caught long holding, only to see the market turn back. Sorry, long holding, only to see the market turn back on you and then start to come off. This is the point where people get frustrated and they start, they scratch trades. It's very, very annoying. So let's go and have a little look at, there's distinct action that happens on each of these. You get this distinct pickup in volume, you get this distinct pickup in delta, and that's the bit that you're looking for from a chart. But this is so much more visible when you see it on a price ladder. So that's what we're going to go and have a little look at right now. Okay, this is the move that we're looking for. What we're looking for is the market to get the break through 23.25. And there's a couple of little distinct elements that happen along the way in getting into this trade and how you can execute this trade. So here we go. What you're looking for is you're looking for the market to pressure at the high. Now, what I mean by this is you see these orders coming in, they're not backing off. Look at, we get filled. Are you seeing any selling getting any traction to the downside? No. Bids keep coming back. You're looking for bids to come back at 23. They keep coming back at 22 3/4. And they keep holding. So you're not seeing any selling coming in here now. This is the pressure that you want. This is saying to you, yes, now's the time. So you can now be looking at this thinking, right, if we start getting a little bit more pace coming in, more buying in, there's your record high, it pops through the high. You can now buy that as you break the high. Your stop is going to be just behind the high. 23 3/4 is previous high. 23 1/4 was the high of the day. Stop down at 23. Nice tight stop here. But what you're noticing now is the buying is relentless. You're not seeing any kind of pushback here. And you can then try and follow this up. As you see this continued buying coming in, this is where you can follow the move up. You can try and buy more as we go. Now, talked about that pressure down here. There's no pullback here. Every single tick back, the bids just keep on coming back in. And so as long as you're seeing that, you see here, the furthest you're coming back is 3 prices. And that's absolutely great, which means you can then continue to move your bids up. Buy 27 1/4. Does it come back more than 3 prices? 4, 5. Okay. So it puts you under a little bit of pressure. But bearing in mind, you've still got 23 3/4. You're still seeing that very quickly, any little pullback, buyers come back in. They come back in nice and quick, and we start building volume higher. So at this point, you're reasonably comfortable. And what we're going to see is also a clear indication of the exit of the move. So far, and think about this when you're scalping, how are you breaking highs? When you break highs so far on this move, it's been little push through, and there you see a change. Prior to this, and you can see then the pullback that comes much quicker, lots more sort of 2-directional action here. This is your end of move. That's the bit that you're after. You do get an opportunity for a quick scalp here if you want to buy 28 1/4, where you flicked back down to. But note now that you're not getting straight back to the highs, whereas previously we stuck to the highs on these moves. And that's the understanding of a scalp. You were waiting for something to change. And you see here, there you see that 28 1/4 keeps ticking back, but note we don't get above 30. This is a sort of very tight area to scalp. You could try and scalp 28 1/4 up to 30 as an opportunity. Very tight option. And you see there, this is the danger of trying to play these very marginal kind of scalps here. That you're now starting to sit with pressuring back on you. And this would be the point where you'd want to be getting out of the trade. But that first scalp was all about that pressure into the high and then recognizing how we're breaking the highs after that. So what we're going to have a look at now is scalp 2 and how we then go and break the highs again. Okay, so now we're coming on to scalp 2. Same principle as previous. You've got the high now currently up at 33 and we're looking for a break again. At this point in time, we're not up at the highs. There's no reason at this moment to want to be buying here. Remember, what you're looking for is you're looking for the pressure, then you're looking for this pace to come in, this sort of snap of buying. So you're ready now. You know what you're looking for. As soon as you get pressure up here at 32 1/2, that's what you're after. That's the point where you can start thinking, yep, I can buy this. And then as that pace comes in, that little panic of people thinking, oh no, it's getting away from me, I must buy. As they start to chase in, you can add quickly above 33 if you can get in. And then as soon as you see that pop up, as we saw previously when we popped to 31, that's the indication that it's time to get out of the trade. And again, this is just how you're looking for a scalp. You start to see already a little bit of pace and then nice and quick, straight to 32 3/4. Bids keep on coming back. We stick. And there you go. You can now start trying to buy once more. And you're actually not seeing any selling at all here. So on this one, you see that pressure really forced into the high. Much quicker break this time. And again, nothing more than 3 ticks back. So you're watching same principle again. Get to the highs, push through. This time, we stall at the high. Can you get back up to high? 36 1/2. All looking okay. Little push through again. So all good here. This is where it gets problematic. Because that doesn't sort of have that flick and wash back. In this case, you have to accept that this is a scalp that's changed its perspective. It's changed the way that it's taken this trade on. And with some scalps, you do have to accept you're going to have to get out of it earlier. Because it changed the way it went up with that whip back, you have to then change your exit strategy. This didn't give you that little spike and exit. This gave you a situation where you're forced to get out earlier. Remember, you're trading a scalp. It's easy to look at this in hindsight and say, oh yeah, well, you should have held on. It could have gone to 40. It could have done this. It could have done that. As a scalp trade, you're taking advantage of the action that is happening at that point in time. That is what's so important. Whenever if you want to be a scalp trader, it's about understanding what you're playing for at that moment. If you're looking for that little pressure up and pop higher and it doesn't come and instead comes to a snap back down, you accept that is now the way that the market's trading. There's a pushback on you. You're on side. You've made the most of that very quick short-term bid up, but you then have to say, okay, I can get out of this trade. It's still not a bad trade. It's still not a losing trade, because with a scalp, you're dictated, or what you're trying to do is you're using the order flow to dictate what you do, how you transact. With the first one, you're using that break, and you can get yourself 6, 7, maybe even 8 handles at a maximum out of that. The second example, quick break, and realistically, you're probably looking more like 2, maybe 3 handles because of the way that traded. But the entry was the same. The management of the trade and your exit of the trade differs, and you have to accept that with scalping. Scalp trades are never exactly the same, and it's the way the flow comes in that tells you how you're going to be able to trade that. So look out for that in future. Momentum breaks of highs, particularly when you're moving into targetless areas, and it's about being humble and looking at, do you want to try and hold this for an indefinite target that you cannot quantify, or are you going to play against the flow, take that advantage to yourself, that little flow of participation, make the most of that, and that's where you get your money from. Again, these types of momentum strategies and other order flow strategies are all the kind of things that we coach people with. These are trades that many of our traders use on a regular basis. It's one of the things that becomes a real big part of week 3 of the career course, where we teach people how you can use order flow to make the most of short-term trades. So momentum type trades, small scalps, flip trades, all of these types of trades are all covered in week 3 of the career program. Hopefully you've enjoyed this one, guys. We'll do more scalping videos in the future as well. So hit the notification, hit subscribe, you'll get more of these. And we'll talk about as well how these relate to our price data course. And also this becomes a big part of week 3 of the career course as well. So check those out, subscribe, hit notifications, look out for the next scalping video that will be coming up very soon. Take care, guys.